I am you from the future. There's no time to explain. Follow me to... Oh, Christ! Ah!
So, in a nutshell, TinyBuild has a differentiated strategy in being a developer publisher. So we both have studios developing games, and we also publish video games, so we bring them to market. We are focused on owning the intellectual property for each of these games. And with that, we want to create long-term franchises that we can take across multiple media. So we don't just want to realize one game, a successful game, we also want to realize a whole franchise around it and expand outside video games into other media such as books, graphic novels, and TV. Brief history of our company. We started 10 years ago when the founders put together a game over the weekend, a game demo over the weekend, and eventually brought it to market. A very tortuous road that taught us a lot about how to be a developers, how to build a game from scratch, failing and recovering at each single step. That is very precious knowledge now, very precious part of our DNA now, because when we sit down with developer studios and we bring forward our proposition as publishers and developers, we speak the same language. Fast forward a few years, we have increased the number of games constantly and started making acquisitions. We'll speak about that over the next few slides. This is our current geographic presence. Our CEO is from Eastern Europe, and you can see our presence there as a starting point. We expanded right out of that, and our headquarters are actually in the US right now, with studios in the US and across most of Europe as well. A big studio in Amsterdam. We have developed, we have published already 40+ games, and we have, as a unique differentiating point in terms of geographic presence, the advantage of being able to source very technically competent talent at an advantageous price in Eastern Europe. This is a theme which has been very recurrent in the video game industry, where other players, excessively focused maybe on Western Europe and the US, are struggling to find, to recruit talent at the right price. Another very interesting part of our go-to-market strategy is our social media following. Here you can see right at the top, TinyBuild with 1.4 million followers across a number of social media platforms. That is about double the next following listed video game company. And we actually punch way above our weight, having a much bigger following than bigger companies like Frontier Development as well. Also to notice, alongside our media following across all media, specifically our presence on YouTube with over 5 billion views. And here it's what we mean by franchise. So once we identified an interesting IP, an interesting piece of intellectual property as a game, once we have acquired that and brought it in-house, we then start developing that specific IP into as big as a franchise as it can possibly become. This is Hello Neighbor, our top seller game. We acquired that 5 years ago. We acquired the IP 5 years ago. And very shortly after the launch of Hello Neighbor, the first game, we started developing Hello Neighbor Hide and Seek, a prequel, and we started working on Secret Neighbor, which is the multiplayer version of Hello Neighbor. That gives you already an idea of how quickly you can act expanding the value of an IP if you own the IP as a publisher. Also, to mention, on the lighter orange part of the tree, on the lighter orange branch, our multimedia expansion. So we started with books and graphic novels, and as you can see from the numbers, sales are quite important. Nearly 2 million sales just on books, and they keep growing. But also we are working right now on the TV series. You will be delighted to find the pilot of Hello Neighbor TV, the first episode of Hello Neighbor TV show on YouTube, which has already collected 18 million views. And also we are working on the big sequel of Hello Neighbor 2, which is it's probably going to be the next big launch over 12 months. Overall, Hello Neighbor 1, the first game, has already achieved over 70 million downloads. And the franchise is so strong, even now, a platform launch of Secret Neighbor, so a game which has originally been launched 2 years ago and has been launched now on a new platform, namely iOS, has achieved the top of the charts on iOS for video games with over 2.8 million downloads. We acquired the IP, we made it a franchise, and we have been doing that so successfully that over time, the share of own IP in our portfolio, in our revenues, has increased from 50% in 2017 to nearly 78% in 2021 at the end of H1. Here we give you also a breakdown of revenues by different franchises. Concentration has peaked with the launch of Hello Neighbor original title in 2017 and 2018. In lighter orange, you see the other titles in the franchise, and that is now between Hello Neighbor and all of the other titles at 43%. Which means that with the other top 10 titles in our portfolio, we make up nearly half of the rest of the revenues. It's a fairly balanced portfolio, which allows us, A, to continue monetizing a very strong franchise, and B, to launch new titles and find and build new franchises. In terms of monetization of our existing titles, we call that back catalog. So any title which has been published in the previous financial year is classified as back title in the current financial year. In the previous financial year, or earlier, I should say. On average, we have collected over 70% of revenues every year from back catalog. That speaks a long way on how successful we have been in keeping our franchises alive, bringing them to more and more platforms, upgrading them with DLCs, and rolling out upgrades and adding more content to keep this title relevant for the audience. Now on the numbers part of the presentation, a very quick overview of our financial results at the end of H1. The number I want to call out of these highlights really is the 18% adjusted EBITDA growth. That's quite low for us in H1. H1 this year is a smaller half, hence the smaller number. That compares with roughly 30% top line growth in consensus numbers right now for the full year 2021. So consensus is expecting a substantial acceleration of that EBITDA growth in the second half. Also, I want to call out on this slide our pipeline of 29 titles. That was to give you an idea of how quickly we are progressing adding new titles. That was only 23 at the time of the IPO last March. So we have already added 10 titles and increased our pipeline by 6 after subtracting 4 titles which have launched in the meantime. A little bit more details on our financials. We don't need to comment much on revenue growth and adjusted EBITDA growth. The light orange column is shorter because it represents only half year, only H1. And as we said, H1 this year is a slightly lighter first half than it is usually, around 40% of the total year if we look at consensus numbers. I want to quickly comment on adjusted operating cash flow. Adjusted operating cash flow will fluctuate up and down, also reflecting how heavy we are investing in new titles. So H1 is partly lower because of our accelerated investment phase. We are working, as we said, on a bigger number of titles. We're now working on 29 titles. And also, there were some timing issues between H1 and H2, namely on account receivable and payables, which will revert in the second half. So we expect a much fuller bar for operating cash flow for the full year 2021 at the end of the year. Moving from H1 results onto our M&A strategy. Really, without going through all of the points on this slide, what I want to call out is the strategic rationale and what we're looking for in terms of M&A. We have a substantial organic revenue growth, and that's supported by a very strong back catalog. So that gives us visibility in terms of growth organically. What we're trying to add with M&A is new IP. So we want to buy new games that have the potential of becoming massive franchises. We want to buy them early at interesting multiples, and we want to develop this IP into franchises like Hello Neighbor. That's our blueprint for building a franchise. We also want to buy complementary publishers. As we add more and more titles, more and more games to our portfolio, we want to make sure that our publishing labels don't get overcrowded. We want to make sure that we give every game our full attention for the most successful launch possible. Alongside complementary publishers, we're also looking to bring on board more development studios. We want more developers, more skills, more advanced skills to make our games better and better. Lastly, additional service providers. This is something which happens on the sides of building a game, and it has to do with localization, so declining a game for different geographies, or maybe porting the game to different platforms, or running quality assurance tests to make sure that the game is has no bugs and can go to market safely. These 4 priorities is where we are focusing our M&A effort, especially on the first 2. That is a differentiating strategy compared to most other players, where we think we have an advantage in terms of operating in a less crowded environment, and also we can create more value. Out of the other three boxes, in the interest of time, let me call out just accretion. All of the M&A deals we have announced so far have been earnings accretive as of day one. That is something we are very proud of and something we will continue to deliver on our deals going forward. In terms of deals we have closed since the beginning of the year, 5 deals, and let me just highlight in terms of the size, the deals we closed since the IPO. The IPO was on March 9th. After that, in June, very few months after that, we announced a new acquisition. Dog Helm is the developer of Streets of Rogue. It's one of our top 5 games where we had already established a long relationship with the studio, but we didn't own the IP, so we are acting only as a publisher. We saw an opportunity to move in and acquire the IP, and at the same time of the acquisition, we also announced Streets of Rogue 2, the sequel, as a new addition to our pipeline. So we acquired the company, I like to say, at the right time in terms of expectations, where there was a transition period between the first successful game and the next one. And that's also what gives us more attractive multiples compared to the industry average. Animal and Backpixel. In terms of size, Dog Helm was 5.6 million maximum consideration. Animal was $10.2 million maximum consideration, and Backpixel was up to 17.1 million maximum consideration. So that gives you an idea of how we are progressing upwards in terms of size and ambition. If it's true that we're 5, Hungry Couch, Streets of Rogue, and Animal were all acquisitions of studios we already had a working relationship with, and we were moving from acting purely as a publisher to owning the IP. But Pixel is the first acquisition we completed with a totally new studio, and I'm going to go through a few more details in a second. To close on this slide, we have more firepower for acquisitions. At the end of June, we had $62 million in cash, and we opened a new credit facility with Bank of America, adding $25 million as a revolving credit facility, which are currently undrawn. DEADSIDE, this is our latest acquisition. Maximum consideration, as I mentioned, of nearly 20 million. The call out from this slide are the EBITDA number and the upfront consideration. This company achieved, Backpixel achieved $3 million in EBITDA in 2020, the first year of the launch of DEADSIDE, the name of the game, and we paid in upfront consideration $6.5 million. So that adds up to a multiple of about 2 times, whichever way you look at it. We have further deferred payment. They are all contingent to very stretched EBITDA targets. Goes without saying that we would be delighted to pay the full amount of the consideration, because that means that they have more than exceeded our base case in terms of expectations. It's also interesting, beyond the numbers on that side, to look briefly at how we came in contact with the company, with the studio, with the developers, and how we established the connection. Our CEO spent over 100 years playing the game and really enjoyed it, apart from the fact that new content was not made available very quickly, very often. And that was basically the main frustration of all of the gamers in the DEADSIDE community. From that started a discussion with the developers about why they were struggling to keep up with demand from the community, and the discussion of some potential solution. From there to a collaboration, from them to the acquisition. This is a good example of how organically, having been a developer and now being a developer publisher, we can establish a good connection with developing studios and take them on board to make these franchises bigger. Closing on the outlook section. This slide shows some of our most recent launches and some of the titles that we are about to launch. As a matter of fact, Undungeon launches tomorrow on Steam. Before going there, game as a service and early access. These are two very interesting traits of the way we are running our portfolio on a day-to-day basis. We mentioned how strong is our contribution from back catalog, and that is partly as a result of the fact that we treat a lot of our titles as living titles. So they are not games that come to market, have a peak, and then fade away quickly. We keep investing in this title, we keep rejuvenating and adding more content. Here you have, for example, the Halloween update for Secret Neighbor. Secret Neighbor is the same title we said earlier, topped the charts on iOS recently. Well, we launched a paranormal update for Halloween, which was also very successful. Hello Engineer has just launched on Stadia, Google Stadia, as a time exclusive for the platform. And we count on adding more and more material as the game matures. We mentioned DEADSIDE, and from here onwards, it's interesting to look at the early access side of our strategy. Early access is when you make a game available to players ahead of the full release. So a full release is called 1.0. If you make the game available before, you typically attract early adopters. People liking technology that want to try the new things, that are very happy to give you extremely detailed feedback. And this as a strategy gives us the chance to incorporate all of that feedback from the early adopters into the final wave of development of the game. The early access phase may last 2 or 3 years, not just a few months, depending on how bigger the community is growing and how much potential we see. So that closes the topic of early access. And then on the right-hand side, our next few launches. These are the new titles we recently announced. Tinykin, one of the best success in terms of social media following a launch. Bookwalker, put yourself in the shoes of a thief that dives into books to steal big artifacts like the Excalibur sword. And Spider Hack, spiders fighting with a lightsaber. What else can I add? Closing on strategies check. This is what we promised at the IPO, leveraging existing IP, acquisitions, expanding the franchise model, and cross-media releases. Without going into the each point one by one, this is what we have delivered so far. So I'm happy to open the floor up for questions.
Why operating costs appear to increase in proportion to new titles? Is it difficult to achieve economies of scale?
Quite the opposite in a way. What is increasing is our investments in new titles. Because we have very high margins of 40% EBITDA, we are putting as much money as we possibly can within these margins at work to develop new franchises and to expand the existing ones. So we do have economies of scales. Every game has a fixed development cost in terms of pre-launch, and then every sale on top of that comes at a nice leverage. But what you might see temporarily, as I highlighted on the operating cash flow side, is when we accelerate on investments, you might have a dip on a temporary dip on operating cash flow conversion.
Okay. The next question is there's a couple of elements to it, so I think we'll be able to squeeze it in. At the IPO launch, it was stated many of the new launches were towards 2021, the end of. How many games have you launched since IPO, and is this on target, and how many will be released next year?
Yeah, So at the time of the IPO, we said we would launch about twice as many titles as the previous year. So last year we published 5 games. So far we have announced 9, so we are on track with expectations. We have already launched 6 of them, and 3 of them are the ones you have seen on the slides where I discussed game as a service and early access. Long story short, everything on track. We have just reiterated our guidance of at least meeting expectations.
Okay, thank you for that. And we've got time for one more. Shares had fallen over 20% since 14th of September after H1 results, despite company fundamentals remaining very strong. Can you account for that?
We're puzzled. Internally, we're puzzled, and we discussed buying more shares. We're all bound by regulation, so we can't actually go on the market and buy shares at short notice. That needs a long lead time. But we're puzzled. Our communication has been very clear. Nothing has changed in terms of guidance. We have a good pipeline in terms of M&A, and we have been announcing a deal every 2 months, which has always been well received. So we can only look at the future with optimism in terms of news flow and in terms of stock performance.